All right, so another crazy week in the markets. Basically, we hit an all-time high on Friday. Bitcoin had a rough week, but it ended very well. It did hold that, 111, 112-ish support, which is very good news. We're back up around 117 at the time of making this video. I wanted to get into that. I wanted to get into Jerome Powell talking at Jackson Hole. I want to talk about stocks, earnings, Bitcoin, MSTR. First things first, if you get value out of the video, please like and subscribe. So let's get right into it here. The first thing is Jerome Powell's speech at Jackson Hole on Friday morning. Now, long story short, basically what he said was, he was talking in a very dovish fashion, and the markets responded. S&P was up 1.5%, NASDAQ was up 1.5%. Small caps are actually up like 2.5%, 3%. Obviously, because lower rates will help small caps the most, so keep that in mind. But he never directly said, "Hey, we're cutting rates," but he did say he did hint at cutting rates, and he also said they're willing to budge on the whole 2% inflation target, which also is dovish. So, long story short, if the goal was good news for stocks and Bitcoin, he probably couldn't have been much more dovish. Maybe a little bit, obviously a little bit, but realistically, considering the way he's been talking the last few months or so, he probably realistically couldn't have been much more dovish than he was. So we're going to see a rate cut in September. I think we're up to a 90% chance. We're about a 75% chance going into the meeting. And then I think 50-50 chance we see another cut in either of the other two meetings. But we'll see. It will depend on the economic data. But my prediction for stocks is probably we still have room to run. I do think we still have room to run. Is it going to be 7,000 by the end of the year on the S&P? I would say less likely than likely. But if I had to put money on us closing higher or lower than where we are right now, end of year, I probably would say higher. But the market, it is overvalued, right? I think that's undeniable. But just because the market's a little bit, and I think it's a little bit overvalued. I don't think it's crazy. People talking about it's the tech bubble all over again. It's like, not really, really not. The PE is very high, but the PEG ratio isn't. And not to mention too, a lot of the .com stocks, a lot of those stocks weren't even making money. Say what you want about the Meg 7, but the Meg 7 are very good companies. They're all very profitable. They're overvalued, I think pretty much every one of them, arguably every one of them, but they are very good companies. And I think that that's something that's different than past bubbles. So keep that in mind. Another thing that I wanted to talk about here is MSTR. MSTR had a pretty bad week. Now, it did turn around quite well on Friday, obviously. But there's talk, there's a lot of FUD around MSTR over the last week or two, and I wanted to talk about that a little bit. Chris Mila says a small number of people on X have been complaining about changes to Strategy's MNAV guidance and selling their positions. Meanwhile, Royal Bank of Canada has been buying a Swedish bank, the New York Common Retirement Fund, also the California Retirement Fund bought. So you have the Norwegian pension fund, sovereign wealth fund. They've all been buying. They've all been buying MSTR over the last couple of weeks, or at the very least disclosing that they've been buying. So if all of these huge players are buying, why are people selling FUD? Why are people bearish? The first reason, I think, is from the Bitcoin therapist here. 99% of cryptocurrencies are scams for whatever reason. For whatever reason, every crypto retard and their inbred cousin wants to attack Michael Saylor and MSTR for buying Bitcoin and putting it on their balance sheet. You know why? Because Bitcoin treasury companies are a threat to S-coins. And that's very true. I think that is the first reason that people don't like MSTR. The other reason is, and the most common reason is, people just don't understand what they're doing. People think that they're just diluting and buying Bitcoin in the same way that, Beyond Meat is diluting to fund their operation. That's not what they're doing. They're diluting a little bit. But you also have to keep in mind that most of what they're doing, like most of the debt that they're issuing, the first thing you have to realize is the debt that they're issuing is very high quality debt. Again, Michael Saylor has said this a million times, and it's funny because people just don't pay attention. They scratch the surface and they think that they're experts. MSTR, their debt is investment grade. Like if their debt would to be rated, it would be above average in the S&P. This idea that they're doing something that it's so risky what they're doing and they're going to get blown up, they're going to get margin called. People who say that don't know what they're talking about, right? Saylor has said time and time again, Bitcoin could go down to 20K tomorrow and they wouldn't get margin called. And the reason for that is there is no margin call, right? There. I mean, if Bitcoin stayed there for 5 or 10 years, arguably, yeah, the debt probably would blow up. But if it went there for a year or two, no, it really wouldn't. And this is the reason why the debt that they issue is like 5-10 years out, because that's 1-2 cycles away, 1 or 2 cycles away, and Bitcoin will be higher, right? Like people don't seem to realize is that the value of their debt is based on the value of the collateral. And when you're 5 to 10 times over collateralized, it's pretty much impossible for it to blow up. Like, and people think that they're similar to FTX, for example, right? What FTX was doing was they were using their own token to borrow money, and not only that, they were borrowing money like 50x less collateralized than MSTR was, and they're doing it with FTT as the underlying asset, not Bitcoin. So when people say that they're doing this kind of stuff, they really just don't know what they're talking about. People call it a Ponzi scheme, and it's like, why is it a Ponzi scheme? A Ponzi scheme relies on new people to come in to satisfy the old people, right? That's not what they're doing. Because if you look at the debt that they've issued through STRD, STRF, STRC, and STRF, they never have to pay it back. They just have to pay the dividend or the coupon, whatever you want to call it. So how is that a Ponzi scheme? Right? I mean, the only way that you could argue, honestly, the only way you could realistically argue that what they're doing is a Ponzi scheme is if they don't actually have the Bitcoin. Then you could argue that. But if that's the case, and that comes out, Saylor, Fong Li, like the executives, like those guys are going to jail probably for decades. And you think that they don't know that? So again, the people that are saying this, they just don't know what they're talking about. But the one caveat that I need to point out here is that when it comes to Bitcoin, when it comes to MSTR, people oftentimes ask, what makes you scared when it comes to Bitcoin? What if something were to happen to make you think that it'll go down over time, or it'll go to zero? I don't think it'll ever go to zero, but if it underperforms, what is the reasons for that? The first reason that I bring up all the time that barely anyone brings up is that the majority of the population is economically and financially illiterate. And saying that it's the majority, if anything, is an understatement. I think it's probably 80-90%. So the thing about that is, you look at Bitcoin, I bring this up all the time, but you look at stocks, you look at real estate, right? Investing in stocks and real estate has been an obvious ticket to maintain your purchasing power over time. But yet, what percentage of the population owns stocks and real estate? Like not that many, especially directly. So what makes you think that, again, obviously Bitcoin is better than those, but I would put money that if Bitcoin returns 20 or 30% for the next 20 or 30 years, I still would be surprised if the majority of the population owned Bitcoin directly. And the reason for that is people are economically illiterate. And not to mention, too, there's a lot of people that love being victims. I think there's probably 20-30% of the population that just loves being victims. They prefer that sense of satisfaction of portraying themselves as victims and getting sympathy from people than actually, figuring their crap out, for lack of a better way of putting it. So, long story short is, no, MSTR is not a Ponzi scheme because, number one, none of these people they don't understand Bitcoin, number one, right? They don't understand Bitcoin. And number two, they don't understand what MSTR is actually doing. The people that saying, oh, they're just taking on debt and buying Bitcoin, that is, technically it's true, but to understand what they're doing, you need to explain how they're taking on debt. Because in life, there's 1,000 ways of taking on debt. There's ways of taking on debt that if you play your cards right, it will make you an insane amount of money over the long run. And then there's also ways of taking on debt that will make you go bankrupt, and everything in between. So when they say they're just taking on debt, they're just demonstrating their ignorance, frankly. The next thing here is Bitcoin archive. Public companies now hold 979,333 Bitcoin. That's 4.66% of the supply. And again, people talk about, this is why I don't think we're going to see a major bear market. We're going to see bear markets still, don't get me wrong, but the 80-90% drawdowns, I think they're a thing of the past. I think probably 20, 30, 40% drawdowns, like what we've seen back in April, going from whatever it was, 108 to 80 or whatever it was, 75, 80. That's about 40%. I think that's what we're going to see. The 70, 80, 90%, I think that's a thing of the past. Again, if we see another 2008 crash, maybe. But every cycle going down 80, 90%, I wouldn't put my money on it, because publicly traded companies own almost 5% of the supply. And if you go back a couple of years, that number was 0.1%. So the only way for that to change is if the companies are forced to sell massive amounts of Bitcoin. And that's not going to happen, because the vast majority of this is held by strategy. And strategy will survive a bear market relatively easily. So I think that everything has changed here. The next thing, priced in Bitcoin. The average U.S. wage is now worth 0.55 Bitcoin. In the past 5 years, it's down 87%. So again, this is why buying Bitcoin, but even to some degree stocks and real estate, I think Bitcoin's way better, followed by stocks, followed by real estate, is so important. So important. Again, it's so annoying to hear people, especially young people, complain nowadays about, I can't afford this, I can't afford a house, I can't afford that. And it's I definitely sympathize with those people to some degree, but on the flip side, it's number one, you vote for stupid, idiotic politicians and you refuse to admit you're wrong. But number two, you refuse to save your money, right? You refuse to save your money, and you refuse to learn economics, you refuse to learn investing. If you're too lazy to do that, why should I care? Why should I care? Right? I have no reason to, because it's not that complicated at all. The next thing from Joe Consorti, Bitcoin has spent 131 days above 100,000, with 43 days above 110. Last cycle, Bitcoin only spent 39 days above 60K. The consolidation above 100,000 is extremely healthy relative to prior cycles. Zoom out and relax. And again, I'm not going to lie and pretend like I didn't think that Bitcoin was going to be 150 or 200,000 by now. I thought that's where it would be. But again, you also have to put it in perspective that we are still doing very well. Bitcoin's still up about 100% over the last year. It's up almost 10x over the last 5 years. So you really have to zoom out. You really have to zoom out. So that's what I wanted to talk about as far as that goes. There was some earnings news from this past week I do want to touch on. The first one, Palo Alto Networks. This is a company I really do like. They beat earnings and revenue. They were up quite significantly on the week. The next one is Home Depot. They barely missed earnings, although they did issue kind of some shaky guidance, but they were actually up quite nicely on that news. The next one is going to be Toll Brothers. This is one of the home builders. The next one is Toll Brothers beat earnings and revenue. They're one of the better home builders in my opinion. However, I'm not necessarily a fan of the home builders right now. The next one is ADI, Analog Devices. They destroyed their earnings. This is a decent company as well. I owned them in the past. I don't own them right now. The next one is going to be Lowe's. Lowe's, a solid company, I think. Beat earnings and revenue. I think there's just better options, so I don't own them, but they were up quite nicely on the week. The next one is Target. Target issued pretty bad earnings. They missed both revenue and earnings. They were down on the week. And the last one is going to be Walmart. Walmart missed their earnings. They beat their revenue. They were down on that news. However, they did say that the consumer still appears to be fairly healthy. So the one thing that concerns me about stocks and Bitcoin going forward is a recession. But I don't see enough data to suggest that we're going into a recession right now. Although I don't think we're far off, right? I don't think we're far off. So that's something definitely to be concerned about. But I do think we're still a little ways off there. So anyways, that's what I wanted to bring up today. Like I mentioned at the start there, if you got value, please like, subscribe, check out those links below, and stay tuned for more.